So our webinar this evening, it's going to be Flying Smarts. We're navigating aircraft insurance and refinancing options. So I will just give us a little introduction here and then hand it over to our speakers. So a little bit of an overview. So for starters, for AGL, we are tailored financing and insurance for every aviation need. We've got experienced team of pilots and aviation enthusiasts, and we can finance anything from a first trainer to a Gulfstream. And then our other presenter is from Travers and Associates. So trusted aviation insurance experts serving clients since the 1950s, and comprehensive coverage solutions is what they offer. So now just to give a little bit of an overview about our speakers. So we've got Alex Martin. He is the VP of Lending over at AGL. And then we'll have John Travers. He's a partner at Travers Insurance Agency. And so, just a little bit of the agenda. John's going to go first. He's going to cover everything for insurance costs and requirements. And then Alex will take over and he'll go over why refinance. And then at the end, we will have a little bit of a Q&A. And so any questions can be added into the chat, as well as we'll answer some that were submitted from the RSVPs. So I will hand it over to John.
Hello, thanks for having me. So Travers Aviation has been around since 1950. I've been doing this for 26 years myself. Our company was founded by my grandfather, actually, Bob Travers, who flew the PBY during World War II. And then after the war, flew for Ozark Airlines and then started selling insurance. And because he had his license and so many friends that were pilots, started naturally just selling some aviation insurance to them. And then eventually he stopped flying for the airlines as his insurance agency grew. And then from there on became an aviation insurance specialist. And today we are one of the largest independently owned aviation insurance specialists in the US. So currently we have about 26 employees and it's still family owned, third generation. Me and my three brothers still all work there and own the company today. So we'll go over a couple things. We'll go over just a little about us. We'll go over the insurance costs, sort of how we come to the premiums that you see from the carriers, the insurance requirements that are required when you buy a new aircraft, things that are typically required of a pilot transitioning into a new to them aircraft. And then we'll go over some common questions that I've gotten throughout the year that just can kind of maybe head off some of the questions at the end, just questions that we get all the time and some of the common answers to those. So we'll dive right into it. So we'll start with sort of how insurance costs are calculated. So there are a few things that go into that, but the one that really costs the most money is the hull value. So aviation insurance premiums are a percentage of the hull value, and then you mix in some premium for liability. And then typically some premium for medical payments, and we'll dive in a little more to that. But the hull value is really what drives the insurance premium. So as a percentage of the hull, and just for example, let's just take a $500,000 hull. So if we have a really high time pilot that all the carriers are going to consider sort of tier one pricing, the where the pilot and aircraft combination are really sought after as far as every carrier says, okay, this is the safest pilot that we can get and the safest airplane we can get. Those premiums are going to run right around 1% of the hull value, and that's historically fairly accurate. It's going to be about 1% of that value. So take a $500,000 airplane, it's going to be around $5,000 a year for a preferred risk, for a risk that all of the carriers say, okay, we'll give this our best pricing. And then down the line for transition pilots and maybe something in between a brand new pilot versus a well-seasoned pilot, those percentages are going to sort of go up or down based on how each carrier sees that risk. So let's just take that same $500,000 airplane. let's call it a private pilot with 100 hours buying a $500,000 Bonanza. So that's not going to be a preferred risk. Preferred risk, they're going to want to see an instrument rating somewhere over 500 total hours, good retractable gear experience, and make and model experience as well. So let's take a 100-hour pilot with no instrument rating, no retractable gear. That's going to see anywhere from 2 to 3 to 4% of that hull, sort of depending on several factors in there, where they are. If they have some retractable gear experience, or 100 hours in a 150 versus someone that maybe has 200 hours, and of that 200 hours, it's maybe in a 182, or maybe some retractable gear experience in there as well. Will sort of be at the lower end of that transition percentage, versus where brand new 100-hour pilot just got their license. Maybe we'll see sort of towards the higher end of that percentage. And so while we're diving into that, we'll talk a little bit about the dual requirements. So each risk is going to be individual. The underwriter is actually on a new purchase when they have a dual requirement. So if you're transitioning into something more high performance, retractable gear, or just your first purchase, and just don't have any experience in that make and model, the carriers are going to require certain dual requirements. So typically what we see is if the risk makes sense, if it's just something where you're just buying a new airplane and maybe have experience in similar aircraft, anywhere from as low as just a checkout to maybe 5 hours of dual. And then as that risk goes up, as that transition goes up, so again, back to a 100-hour pilot buying a Bonanza, they might want to see a little more than just a checkout from that, because you haven't flown the retractable gear, you haven't flown the high performance. So anywhere from, maybe 15 to 25 hours of dual instruction. And with that, the lot of questions that we get from that is, can I just name my CFI since I'm a low time pilot? The answer to that is no. We'll dive into that a little in the next slide, but we really want to address that because that's one of the more common questions that we get. As far as the hull value, a lot of people, when they say, okay, well, if it's 2% of the hull, can I just insure it for 250,000 instead of 500,000 and cut my premiums? The answer is no. They want you to keep it within about 10% of that hull value, but there's good reason for it. So if you had a $500,000 airplane and you insured it for $250,000, these policies, most of them are stated value policies. So in the event of a loss, the value on that declarations page is the most that they'll pay out in a loss. So if you have a $500,000 airplane, let's just say your avionics are worth 300,000 and the rest is worth 200,000. If you had a gear up landing, you only have $250,000 in coverage. Once that hits 250,000, they write you a check for 250,000 and they keep the salvage. So they would keep your avionics, they would keep the salvage of the aircraft. They can do with it whatever they want. They can go and repair it and basically sell it. So you'd be very disadvantaged insuring the aircraft. And sort of on the other end of that spectrum, since we're talking about it, is over insuring the aircraft. So for the same reason that you don't want to underinsure it, let's just say it's worth $500,000 and you think, well, shoot, why don't I insure it for 700,000? And that way, if something happens, I can get a newer, nicer aircraft. Unfortunately, they don't allow you to do that. But also the bigger problem is that you would find yourself potentially repairing a badly damaged aircraft. So again, if it was 500,000 in value and the thing was in a really bad accident, the carrier 600,000 to fix it versus just 500,000 to total it. Well, you would want them to total at that point because it's a badly damaged aircraft that you probably don't want back. But also they would just write that check and then they would keep the salvage, and underinsuring for the same reason they would. If you overinsured it, they would repair it, and then you would have the aircraft that you probably don't want back. You'd probably just want to total out at that point. So those are the three things on there: the hull value, liability, and medical premium. So the hull value itself is the physical damage to the aircraft. That's the most of the premium. The liability, typically people carry around $1 million in liability. So that's sort of the second part that makes up the insurance policy. The liability is for third-party damage. When you damage someone else or someone else's property, that's your liability premium, the liability portion of your policy. And then med pay, the medical payments, which is commonly misunderstood. That's just a voluntary settlement. If someone has a minor injury injury and you want to avoid going through the legal process, that they have about, typically it's three, maybe five, maybe $10,000 in coverage there. Let's just say you were stepping off the wing of the aircraft and twisted your ankle, or sustained a minor injury. It's your friend. You don't want to have to go through and hire a lawyer and sue and things like that. You have a medical payment there that's available for minor injuries. Um, so yeah, and then down here, the flying history and pilot rating. So that's really what drives what percentage of that hull value you're going to pay, is sort of what have you been flying? How does it relate to this new purchase? What ratings do you have? Getting an instrument rating is really big. Getting the commercial, not as much as you might think, but getting the instrument rating really shows that you're taking that next step in your piloting, and the industry really likes that. They like to see that you've gone through that additional training. And then obviously being a safer pilot, as far as one of the larger losses we see is VFR into IMC. So obviously pilots that have the instrument rating have that training and can handle that type of situation. Next slide. So, yep, a lot of the question on dual requirements. So really, that's always going to come down to is the risk, does the risk make sense to the carrier? So let's just take, if you're a 100-hour pilot and you want to buy a brand new Meridian, your dual requirements are going to be fairly significant. They're going to want you to go through factory approved ground and flight school, and I can't even ballpark, but maybe 100 hours of dual for a larger transition like that, versus something real simple where if you're going from a 182 to a 182 RG, still some dual requirements, maybe 25 hours, something like that, 15 hours. But that really is based off of where you are in your piloting and what you're going to fly, what you're going to purchase there. Yeah, listing yourself as a pilot is one of the most common questions that we get. They say, can I just list my CFI instead of myself? That is a problem. So people always hear that. I don't know who starts these rumors, but they keep me busy at my job. So you have to list yourself on there as a pilot if you're going to be a pilot on the aircraft, even dual only, if you're going to operate the controls in any way, shape, or form. It's specifically written into the insurance policy. Insurance policies do not necessarily follow the FAA regulations. So when someone says, well, my CFI is the pilot in command, I don't need to list myself, although that might be true if he's given you dual instruction, that is specifically excluded in the insurance policy. You can only give dual instruction to someone that is listed on there to receive that dual instruction on the policy. Otherwise, it does completely void the policy. So that's one of the questions we get, especially on new purchases. They say, well, I'll just list my CFI. I'll fly dual only for the first 50 hours, and that'll save me a bunch of money. But it's unfortunately not the way that it works. The insurance policies are specifically written to exclude that. So you always want to make sure that you trust the insurance agent that you're working at and not the CFI. And that's kind of the running joke that we have in our office is you don't want me to teach you how to fly an airplane, and you don't want your CFI to teach you about airplane insurance. Let's, we'll do that part, and we'll do a great job for you. And then on to lien holder requirements. So a lot of times when you have a loan against the aircraft, the lien holder almost always will require that you list them as a loss payee with breach of warranty. And so breach of warranty, what breach of warranty coverage means is that pretty much no matter what happens, the bank will get paid. So if you violate the policy, if you breach that warranty, if you breach the wording of the policy, the bank or the lien holder will still get paid. And that is why right above you see liability only or ground only. So someone will say with a lien holder, can I save some money on this new purchase? I want to go with ground only or liability only, but I have a bank. Well, the banks are always going to require that you carry the full coverage. But also the insurance carrier will require full coverage as well for exactly that point, the breach of warranty coverage. So if you said, well, I'll just go with ground only, if you flew it anyway, so you breached that warranty, you flew the aircraft anyway, the insurance carrier would still have to pay the bank. So there's no reduction there because it doesn't reduce the risk that the insurance company takes on. So that's why there's a situation where you have to carry that full coverage and carry that lien holder's endorsement on there. And loss payee, they would get paid essentially first. So if you had a $200,000 airplane and a $180,000 loan and the aircraft got totaled, the bank would get paid first, and then the balance would go to you for whatever was left of that stated value policy on your hull. Next slide. So we get this question all the time. When should I get a quote? So there's really two things to pay attention to. One is that the insurance companies don't want you to get 100 different quotes. There's a lot of manual labor that goes into this. And if you start sending the same person with, 50 different airplanes they're thinking about buying, they'll usually stop quoting. And so that's where, we can really help you if you're still at that stage where you're really not sure, but you wanted to talk about a wide range of airplanes. It's just a good conversation to have. We have a lot of people in our office with anywhere from 30 years, and anyone answering the phone and taking a question like this, probably minimum of 10 years of experience. That's going to be able to give you a really good ballpark for what that quote is going to be. But when you should really lock it down, right around the time you're going to make an offer. The last thing you want to do is get to closing and then say, okay, well, now it's time to get insurance, and something goes wrong. We want to really make sure, number one, that you're comfortable with the premiums and the dual and everything else that happens. But more importantly, that we don't want any surprises at closing. So by the time that you're really going to make an offer, right around you say, okay, I'm going to put an offer in on this aircraft. Give us a buzz, fill out an online quote form, whatever's easiest for you. And from there, we'll get you that number locked down so that when you actually go, if the negotiations get down to where you have a deal, that part is already taken care of. And that's really what we want, is a nice, smooth transaction for you where you're not at the closing worried about getting a quote, which also brings into when do you bind the coverage, and really those go hand in hand. The reason being, I can't tell you how many times someone has called me on Memorial Friday at 3 o'clock on my cell phone and said, "Hey, I've got this client. They just closed, and we're sitting here with this airplane that he owns, and we need to get a quote." Now, can I get it done? Most of the time we can, but it can certainly be stressful for all parties. So always get your quote well in advance before you close. And then when you should bind the coverage is as soon as you know the closing date. So if you say, okay, look, I'm going to close next Sunday, but that's the date. That's the date we have locked down for closing. Go ahead and give us a call. Bind coverage over the phone then. If you don't end up buying the aircraft, you don't owe any money. So that's the thing in an aviation insurance, is something called an insurable interest. You have to have an insurable interest to actually insure something. Conversely, if you don't have an insurable interest, if you didn't buy the aircraft essentially, then you can't have insurance coverage on it. And so there's no money due. So if you think you're going to buy it over the weekend, or, if you think you're going to buy it next Friday at 7 o'clock at night or whatever, as soon as you have that time kind of locked down, you say, okay, this is when we're closing. Go ahead and give our office a call. We'll bind the coverage over the phone. If something goes wrong, give us a call on Monday, and no big deal. We can always cancel it out, and that's not an issue to do that. But we'd much rather have you bind in advance and then give us a call on Monday, no premium due, versus being stuck over the weekend. Maybe you got to stick the aircraft in a hangar and just hope that nothing happens. That's not the situation that anyone wants to be in. And then also now the question, am I covered during the dual period if one is required? That we actually get that a lot. The answer is yes. You want to make sure that your CFI is approved, though. It's not a situation where just any CFI can give you dual. So the CFI would have to be one of two things. They either have to be listed on the policy and approved to give that dual, or meet the open pilot warranty on a policy. Every policy will show on there an open pilot warranty that sets forth certain requirements that the CFI, if he meets them, then he can automatically go ahead and train you. If he does not meet each and every one of those requirements on the open pilot warranty, he'll need to be listed as a named pilot and approved to give you that dual. But provided that happens, then yes, during the dual, it's not like you have to wait to get the 25 hours. You can actually fly it as long as you have that CFI in there giving you that dual instruction. And then at the conclusion of the dual instruction, typically you're good to go. Sometimes they'll have additional requirements. Sometimes they'll say 25 hours of dual prior to solo, and then 10 hours of solo prior to carrying passengers. So they'll want you to limit some of that first couple hours to just flying by yourself for a couple different reasons. They want you to be focused in there and not distracted, but also they want to reduce their liability, the insurance carrier's liability, by not having passengers in the aircraft with you. So those are some of the reasons why they do that. But yes, you're typically covered during that dual period. And then the other solo requirement, if required, sometimes the dual requirement will also have in it a situation where you have to go to factory approved ground and flight school, in which case that's something you want to touch a little bit more individually with the agent that quoted it and make sure that you're going to the right school. We don't want you going through a school that you think is the right one, and then it turns out that it's not the school that you want to go to. And since I just checked my clock there, I've got a minute left here. Real quick, I just wanted to touch on while you're buying an aircraft, if you're flying someone else's aircraft, or if you're flying a flight school aircraft, borrowing your friends, whatever, there's a thing in almost every insurance policy that says they can subrogate a loss against the person that caused the damage. So what you want to make sure that you have on there is renter's insurance that would cover you for the aircraft that you're flying. That's the only real protection you're going to get if you're flying someone else's aircraft is your own personal policy. Because without that, you have no control over it. And a lot of times you don't have coverage when you think you might. So if you're flying someone else's aircraft or renting aircraft while you're looking to purchase one, just make sure that you carry renter's insurance. It's very affordable. We offer it on our website at traversaviation.com, and it's by click print. You can get it in just a matter of a couple minutes. You pay for it right there, and it's active as soon as you pay for it and get your confirmation. But that is something that you don't want to get stuck with, is that you fly someone else's aircraft, something goes wrong, and the insurance company pays that person, but then they subrogate that claim against you, in which case you would be legally liable for damage that you did to that aircraft, just like if you damaged someone else's car or property. It works almost the exact same. If you're liable, then you would be on the hook for that. And with that, I'll pass it off and see you guys back at the Q&A.
Awesome. Thanks so much, John. I'm going to jump in and talk a bit about aircraft refinancing. If any of you all here were on the first seminar about a month ago or so, we talked a lot about aircraft financing. So more so, what kind of loan options are available for purchases, different types of quotes, different types of structures. So a lot of detail over that on the first seminar, which is recorded. Um, this seminar, I'm going to talk a little bit more about the other end, which is going to be the refinancing. And the reason I want to talk about this is I've been having a lot of folks give me a call and ask this the last month or so. And I put this first slide up here kind of as a joke, but you can see the big guy at the presentation. He's saying, as you can see, there are a few down ticks followed by a few up ticks, finishing off with some antics. And he's more or less referencing the stock market. And we've all seen this in the last month or so with the political climate. The market has been rather volatile. And a lot of people have called me up and said, Alex, I just don't have as much cash as I did, a few months prior. And I bought this airplane in cash at the end of last year. And well, I'm thinking about refinancing it and reimbursing so I can get some of that money back. So that's kind of the reason for discussing this today. Kendall, you can flip to the next one. So a little about myself, and then we'll jump into the topics. My name is Alex Martin. I am the Vice President of Lending for Aircraft Guarantee and Lending. We are a loan brokerage that partners with Airmart. I started flying when I was 14 years old. I got tired of me being on the computer all day playing Microsoft Flight Simulator, and they got me a introductory flight for my birthday one year, and then eventually got my private pilot in high school and got my instrument shortly thereafter. Work history mostly includes aviation-oriented jobs. I started out at Piper Aircraft, worked in marketing and sales over their headquarters in Vero Beach for a little while. Then I moved to Lockheed. Got a little too cold up in DC and spent the last 8 years of my life over at We Florida Financial Credit Union, doing a large aircraft lending portfolio, financing hundreds and hundreds of borrowers looking to buy anything from a Piper Archer all the way up through TBMs and Pilatus. And just recently, I've transitioned over to the brokerage arena with AGL, and it's been a lot of fun. So you can skip over to the next slide. So what am I going to talk about? A little bit about us. Why would we refinance? Then we're going to do a little bit of myth busting, and then we're going to finalize up with some options and some quotes for refinances. So what are the benefits of a refinance? Obviously, the most common situation, at least in the last few months, I would say, is more so a reimbursement for the purchase. Some folks who buy in cash decide down the road that they no longer want to keep that cash locked up in the airplane. So essentially, they put a loan against the airplane, and they can take out some of the equity from it and use those cash for other purposes. We've had folks who have refinanced airplanes. This was a funny guy. We had a guy once with a newer Cirrus. I think it was worth around 800K, and he refinanced the airplane to put a new pool in his house. So at the time, the interest rate was a little cheaper than the his home equity rate. So the loan against the airplane. But the reality of it is, most folks, it's a cheap way to borrow funds, especially if they want to do upgrades on the airplane, whether that's new engine, new paint, new interior, avionic work, etc. It's usually a very good way to cover those types of expenses. The fourth reason that we tend to see refinances is actually for ownership changes. So let's say you bought an airplane with a buddy, and the two of you are in an LLC that holds the airplane. And a couple years down the road, well, one of you just doesn't want to own that airplane anymore for some reason. A lot of times, if there is an existing loan against that airplane, the bank will actually require the loan to be refinanced to remove the additional partner. So you can't just go in, change your LLC, take the partner off, and go on your merry way. More than likely, your loan docs will prohibit that, and you will actually have to pay off the original loan, refinance it into a new loan with the new owners on the loan. So that's another typical reason we see refinances. So this is kind of the meat of it. I kind of wanted to go through some typical myths that I get a lot of times from people who want to refinance. And I'm sorry, but when I was a kid, I loved Mythbusters. It was like one of my favorite shows. So I just had to throw in that little graphic there. But the first thing I hear a lot is they call me and they say, Alex, I bought my airplane a little while ago, 4 or 5 years ago. I don't think a bank's going to refinance it. Don't I have to buy the airplane in the last 3 or 4 months to get a loan against it? And the reality is no, that generally is not the case. Out of our 14 or so lending partners, every single lending partner, with the exception of one, is actually fine if you've owned the airplane for 5, 6, 7 years or 1 week. Generally speaking, they're okay with it. The second myth we get is, and this one's also kind of common, especially for the folks who use holding companies. They say, Alex, I've been writing off the expenses for this airplane. I got a lot of expenses in there. The bank, they're not gonna like this loss on my tax return. It's a real big loss, but I bought this airplane just so I could reduce my tax burden. And I know banks look at cash flow, so how is this going to play out? And the reality of it is, the banks, most of them at least, kind of understand that's happening. So if you have certain expenses you're writing off, especially things like depreciation, a lot of times the banks will actually add those numbers back into your cash flow. So if you got a new airplane, you got 100,000 worth of depreciation written off on there and you're showing a big loss, more than likely the bank is actually going to plug that 100K back into your cash flow. Because technically speaking, depreciation is a non-cash expense, so they will plug that back in. The other neat thing is a lot of times the banks, if you have enough equity in that airplane, a good example is some of the folks who bought the airplane before 2020. Prices were a lot lower then. If you still own that airplane today, good chance your airplane has increased a lot in value. And if you have an airplane with a lot of equity in it and you're not looking to pull everything out, sometimes the banks will actually finance you with no docs. Typical situation, if you have a 40 or a 60% loan to value on the loan versus the value of the airplane, we have some banks out there that will actually finance as an asset-based loan. So you still get a really competitive interest rate, in the mid sixes, I'd say 20 years, and you don't have to send in tax returns. You don't have to send in, pay stubs, W-2s, or anything of the sort. They'll just approve you based on your credit history. So a lot of times, again, if you do have that holding company writing off those expenses, we can usually find a way to work around that. The third myth I have here, the bank is going to give me a higher interest rate or a lower loan to value because I'm refinancing. And this is generally speaking a myth as well. Out of all of our bank partners, we only have one that will actually adjust loan to values based on time frame of purchase versus time frame of refinance. And the interesting thing, the loan to value, it really doesn't change much. It changes by about 10% for that specific bank partner. So for the most part, it's not going to be a huge change to your deal. But if you're going through a primary partner, one of the partners with the strong interest rates for a strong customer, you're going to be funding at the same loan to value that you would have funded at if you use the loan with your purchase. Now, the interest rates, those I have never seen any changes on. All the banks we work with, if you're buying or refinancing, your interest rate is going to be exactly the same. You're not going to have a difference. The interest rate is more so based on the qualifications of the borrowers financially. And sometimes, of course, the maybe the age of the aircraft, the type of the aircraft, or the time on the airplane may impact the rate. But how long you've owned it or when you purchased it generally is not going to have an impact on your interest rate. The fourth bullet point I have here, this one comes up a lot for the folks who are looking to refinance and put in a new engine or do upgrades on the airplane. And these folks, they may have used a loan to purchase their airplane 3, 4 years down the road. They say, Alex, my engine's timed out, I need to put a new engine in there, or, I want to put in a new panel. But I already have a loan. I financed it with a bank a few years ago. I don't think I'm going to be able to get a loan for these upgrades. And the reality of it is, that's not the case. Now, I do want to preface this though. Airplanes are not like houses. You go to a bank and you get a home loan. Usually they have like a first place lien, a second place lien, a third place lien, etc. Um, but with the airplane loans, that's not the case. Most banks will only allow one lien against that airplane. So as you do this, what we would actually do is we would refinance your airplane and we would pay off the original loan. So in that particular situation, your loan will get paid off at closing, and then we will use the new loan to pay off the original loan and to cover the funds for the upgrades. So in that situation, at day of closing, your original loan will get paid off, and then you'll either have money held back in an escrow to pay for the upgrades, or funds will be dispersed directly to your checking account, and you can use those to pay the mechanic directly for the work. So let's talk about what the numbers look like. And I touched on this in the original seminar last month in a bit more detail. But the reality of it is I do want to bring it back in line just because there's anybody new here, or you just kind of want to get a ballpark idea of what these numbers are looking like. Let's talk a little bit about quotes. Now, the best quote, or I should say the best interest rate and the best term, are typically going to happen for well-qualified customers buying airplanes for personal use. So if you're buying an airplane that you're going to put into flight school, or you're going to put into a charter operation or some kind of other situation, your rates and terms may be a little higher for the interest rate and maybe a little shorter term for your monthly payments. But if you're looking at a typical deal with a personal use airplane that you're flying for your own pleasure and business, get you a nice competitive rate with a nice competitive loan to value and a nice competitive term. So what we're typically seeing right now for these kind of structures are interest rates in the mid 6%. A good nice number to use is probably going to be somewhere around 6.75 for budgeting purposes. And we're typically seeing that with monthly payments calculated off of 20 years. So if you run that into your loan calculator, 6.75, 20 years is a good number to plug into that calculator. Typical loan to values are going to be around 85%, and that'll hold true for the majority of refinance scenarios as well. Um, Generally speaking, on some situations, we can go as high as 90% loan to value. But again, if you're looking for just a ballpark number to plug into a calculator and run some math on, 85% of the value of the airplane is a good figure to use. Now, how do the banks calculate this value on a refi? If you have bought the airplane recently, and I mean recent, like the last 6 to 12 months or so, more than likely the bank is going to ask you how much you paid for the airplane. Whether or not they use that is up to them, but for their own curiosity and their own valuation purposes, they're probably going to know what you paid for that airplane. If you bought the airplane more than a year ago or more than 6 months ago, they may not ask, in which case they're just going to run a valuation on the airplane. Majority of valuations are completed online through a platform similar to, I'd say, Kelley Blue Book, which is used for cars. There's a different platform that exists for airplanes. The banks use it. Aircraft Guarantee and Lending uses it. So if you do own an airplane and you're curious how much you'd be able to cash out of it, just send us over the specs on it. We can run that value and get it right over to you and give you a quick quote, a quick estimate for the loan amount. The other neat thing about refinance is the fees are generally pretty minimal. Our lowest fee bank right now is actually $289 for doc fees on a refinance. So really, they're typically not very high. In more complex situations or more complex borrowers, you may potentially see a little higher fee structure. But in most deals, the actual loan fees for the bank are going to be fairly cheap. And to be frank, the fees are the same as if you did the loan for a purchase. So if you're having some regret that you didn't do the loan, a couple months ago, it's okay. The banks are not charging you more money just because it's a refinance. And the final thing, as we kind of discussed earlier, if you don't want to put a significant amount of paperwork and effort into the refi, and you just want a quick loan to cash out and reimburse, there are no doc and asset-based loans available. So in these loans, oftentimes we need a credit pull and a loan application, and that's about it. If the credit supports the deal and the loan application supports the deal, the bank will issue a pre-approval, and you'll be good to go. We can get the aircraft specs, get some photos, get some valuation drafted, a few log copies, and we can get the loan funded through an escrow agent. So in those instances, those are very easy. The no doc loans typically can still be done at 85% loan to value. If you're doing a larger size transaction, typically over 200K, you'd be more so looking at a asset-based loan, which also documentation is minimal. You will not need to submit a tax return or pay stubs. You may have to send through bank statements along with your loan application, but that's about it. Interest rate is still very competitive, and on those deals, typically for an asset-based no doc loan or minimal doc loan, you'll be cashing out about 60% of the value of the airplane. Of course, if you wish to do so, you can always go through traditional underwriting. Traditional underwriting is always going to get you the best loan to value out there, and typically the best interest rate as well. So what does the process look like? And I'm still calling this a pre-approval because whether you purchase or you refinance, you're still going to go through a pre-approval process for the majority of transactions. So typical pre-approval is pretty easy. Basically, what we'll do, we'll send you an email with our loan application and the list of financials we need, or if you're doing a no doc loan, we'll skip those. But typically, the pre-approval takes about a business day, generally very quick. Once you are pre-approved, we'll send you a list of the airplane files we'll need for closing. Generally, in a refinance, very minimal. Some photos, a spec sheet. If you have your old sales listing, that will usually work. Um, a couple of logbook copies, and depending on the situation, we may need a short form filled out by an A&P. But beyond that, the aircraft documentation is fairly minimal. We will utilize an escrow agent for the refinance because essentially they will be needed to file the lien against the airplane. And once you send us in all those airplane files, we can usually get the loan funded and closed a few days after. We've had a couple folks who have gone pre-approved for refinance and closed at quickest, I'd say 1 to 2 days later. So generally they're very easy, very quick, and a nice way to get that equity back into your checking or savings account. So that about wraps it up. I'm going to hand this back over to Kendall. I want to touch base, see if anybody has any questions for John on the aviation insurance end, or if there's any questions for myself on the lending end.
All righty. Let's see. It looks like you all touched on a good chunk of our questions, but we have a couple. Let's see. Let's start with why should I use a loan broker instead of going directly to the bank?
Sure. So that's a good question. And I touched on this in detail in the first seminar. So if you want the long answer, you can jump on the YouTube recording. But the Reader's Digest version of it, the reality of it is there's a good amount of banks out there who actually do aircraft lending, but oddly enough, they don't advertise. So if you're going to go on Google and just search aircraft loans or something of the sort, you may not come across these banks. And one of our best examples I can give you, we have a bank partner right now with some of our most competitive interest rates. And if you do manage to get in contact with them directly, they will actually tell you that you have to work through a broker. So generally speaking, that's one of the reasons is it is kind of hard to figure out all of the bank partners out there. So as a broker, what we can do is we can figure out your specific financial need, your aircraft need, and then we can find the best product available for you. So that's the main benefit. We'll take care of you, get you to the right bank on the first try, so that way you're not shopping around doing multiple credit calls and sending off different packages to different folks. We'll get you in touch with the right person on the first try and get you funded.
Perfect. And then let's see, John, someone asked, how can older pilots obtain insurance?
We get this one a lot. And so, really, what it comes down to is most of what you hear on the internet chat rooms or around the hangar or the coffee pot are really not a true representation of the industry. So, you'll hear, well, as soon as you turn 60, you got to hang it up and they can't insure you. And nothing could be further from the truth. Most pilots, depending on the pilot and the aircraft combination, once we get you with a good home, we can usually keep you for just about ever. We very rarely have someone time out with the entire industry due to age. So although we know that it's sensitive and a lot of times with a new purchase, if it's a higher performance, more sophisticated aircraft with a pilot getting up into their mid 70s, sometimes that can be a little more difficult, but really age is not going to be as bad as you've heard about. I just think that it does get blown up a little bit, and I think rightfully so. I think people get concerned that okay, this is my hobby, this is my passion. Am I going to be able to do it in retirement? And the answer is mostly yes. Very rarely is it just simply you're too old to get insurance on it. Most of the time, it's a fairly pain-free situation. Usually well into your late 70s and even early 80s, as long as the aircraft makes sense. Usually, once you cross somewhere that late 70s, early 80s, they'll want you to stay with easier to operate aircraft versus a very complex aircraft. But yeah, generally speaking, not as bad as you've heard.
Perfect. And then what are common reasons banks would not refinance an airplane?
Sure. So this is a good question, and honestly, it depends. Obviously, the easy answer is financial situations. The customer just doesn't qualify financially. That would be a typical reason. But the other reason we tend to see is folks who may be using the funds for something that makes the bank a little nervous. A good example, we had a gentleman a little while back who actually called us up and he said to me, he said, Alex, I own my airplane free and clear. I want to pay off my tax lien. In those kind of situations, the bank is, that's already a big red flag to the bank from a financial purpose. So in those instances, it's probably not going to fly. Another example that was just we couldn't get to work. The customer called us up and he said, Alex, I got an airplane, got a bunch of equity in it. I want to refinance, cash it out, and I want to use that money to invest in the stock market. And also, again, from the bank standpoint, their view on it is, we're not here to be your margin account, your line of credit. If you want to do that, go through your investment company instead of your airplane. So those are probably the more obscure purposes of use, may occasionally be shut down by the bank. But if you're using it for something legitimate, you need the cash for just from a reimbursement from the purchase or for upgrades or something of the sort. Generally speaking, the bank will be fine with the usage.
Perfect. And John, does it impact my insurance premium if I'm leasing the plane out to a flight school?
Yep. So if you're going to lease the aircraft back to a flight school charter operator or anyone else, the insurance typically is going to go through that policy. It's going to go through the person who you're leasing it to. It's going to go through their insurance policy. So, typical example, let's just say you had a Cessna 172, you flew it for personal pleasure and business use. That is the cheapest use you can use insurance wise for the aircraft. If you're going to use it in a flight school in a training environment, it's going to carry a little bit higher of a rate. But more importantly, that insurance has to go through the flight school, and that rate's going to be based more on the flight school and very little to do with you. It's going to be based on their loss ratios, their training programs, their CFIs, things like that are going to drive that premium more so than just your ownership of the aircraft.
Perfect. And then Alex looks like the last one. When is the right time to refinance?
That's a good question. It depends on the customer, is the honest answer. Generally speaking, I would say do it sooner than later, because it's one of those things where right now the banks are actively making loans, which is good. So while we're in that kind of market, it's always good to run through a loan on your aircraft if you are able to. And the other thing I'll say, a lot of folks have been, asking me, Alex, I might hold off on the refinance for a few months. I think interest rates are going to go down. And the reality of it is, looking at your crystal ball, it's kind of hard to predict whether rates are going to go down or they're going to go up or left or right at this point. But what I can say is historically, over the last 6 months, we actually haven't had a lot of rate drops. Even with what's been happening in the market over the last 60 days or so, we actually have not had any rate drops during that time frame. So generally speaking, I would say if you need the funds, go ahead and do the refinance. And the reality of it is, if a couple years down the road, rates are better, you can always refinance your loan at that point. Or if you've owned the airplane for a little while, there's a good chance a few years down the road, you might be paying it off and stepping it up to bigger airplane anyways, in which case your loan will be getting paid off. So generally speaking, I recommend when you need the funds, go ahead and do it. I personally wouldn't recommend holding out just because you think rates might go down in the near future. Because from what we've been seeing, they've been fairly steady for the last 6 to 12 months.
Perfect. Alrighty. Well, I think that's all of the questions we got sent in. So thank you, Alex and John. And if anyone has any other questions or wants to reach out for more info, we've got both Alex and John's phone, email, and then the websites listed here. So thank you all for joining us.
Thanks so much,
Thanks,
everyone.
guys. Have a good
Thank you.
one.
All right, thanks.
See ya.